Now let's explore the pivot points, classic indicator, and to be honest, one of my favorites that helps to identify dynamic based on the mathematics and not just the eyes, dynamic support and resistance levels. So let's see where do we find it, how do we use that? Let's take a look. So under the section of the indicators, you go to other and scroll down to the pivot point. By default, this is how it looks like. It comes with a time frame of daily, weekly, on monthly or the hour. I personally love the weekly a lot, and of course the daily for shorter term levels. So let's present the daily. You can of course choose how you would see the levels, the pivot, which is the median price, the center level, based on which all the other levels would be determined. Resistance 1, resistance 2, and resistance 3, and support 1, 2, and 3. You can choose the visibility and of course the levels, extra levels, if you would like to add. And this is how it looks like. Of course, the daily pivots would make no sense on the 4-hour chart. So let's drop to the 1-hour chart for the example, and even just the 15 minutes, so you can see how that looks like. So this is the pivot indicator. The white line, this is the center line, the pivot. So it is based on the previous candles, high, low, open, close. The mathematics gives you simple output, pivot level, the center level, which based on you would see the deviation levels, which cause the resistances, and the support below the price. So the way the traders love to use the pivot levels is, first of all, determine potential target levels up to where the pair can go. Second, the level of bounces, where from you could expect some bounces and many times even trend reversal. Or if it's a bigger or broader trend, you can expect to return to the main trend. So for example, if we take a look here on the euro dollar, currently this is a bullish price bounce. Let's zoom in a little bit. A little bullish price bounce, right? As the market is simply making a sequence of higher highs, higher lows. So you can see that the pivot by itself, the level, the classical pivot point, the white line, acts as a dynamic support on this trending momentum, right? On this bullish trending momentum. And the traders, if the market managed to bounce from there, right? Bounce means go below, go up, above. Here, go below, go above. Traders love using that to join back to the current bigger, broader momentum. On the other hand, when the rally happens, up to where can that go, right? So the rally happens, resistance 1 is a very legit target during the day, because on the next day you would get next levels if you use the daily pivots. Weekly pivots, of course, you would get them once in a week. The next day you can see new levels and new potential targets. And these are not only targets, these are used also as levels where the market can create bounces from. For example, reaching the resistance 1, and we can look for potential reverses. When we are going down, no bounce here on support 1, yes bounce here from support 2, and we can start going up, back to support 1, and then back to the pivot level itself. When it comes to pivots, it's important to remember this is absolutely phenomenal indicator from my point of view, which is based on real price, not historical high, low, trend lines, etc. This is a pure price, high, low, open, close of the previous bars. Based on these mathematics, it gives you the current key level plus some deviation level, which create a support 1, support 2, support 3, and resistance 1, 2, and 3. The key levels during the day or during the week are the resistance 1 and 2, while 3 is considered a more extreme level, where, and if reached, that means something really overwhelming and exhaustion happens on the market.